Hey guys, how are you? Been a while since I chatted to you, and I just want to have a word around the cryptos. When you're getting interested in a particular market and you're engaging and you're potentially putting money in, one of the best things to do is always to compress and emotionally take some of the fizz out of your perception of that market. In other words, reduce the hype and cut to the chase of what the true value is, and also highlight openly all the elements that are potentially threatening or negative about the opportunity. So it's kind of like doing a strengths, weaknesses, opportunities, and threats, what was typically known as the MBA's SWOT analysis. For traders that are getting emotionally excited and sucked in, as we often do, one of the best things you can do is to say, what are the dangers with cryptos? So this clip is about the 7 items that I've identified as the potential dangers that go with investing and putting money with cryptos. So first of all, number one, it's a fetal industry. It's a techie, early doors fetal industry where there are a lot of potential problems with what's going on in the market. In other words, the technologies are far from slick, the websites are clunky, potentially the security is weak. We've had Mt. Gox that was hacked. In other words, money was essentially stolen. We have a number of lack of usability and simplicity, confusion. People can copy one kind of coins, a special key, and put it in the wrong place and lose that money. It'll never be recouped. So there's risks if you execute incorrectly. There's not much information. There's no call center. There's no chat help. There's no head office that you can drive to. This is entirely in the ether. You lose something, you're stuck with sending emails to some support address and hoping that there is a real commitment to execute and solve your problem. So that's point number one, the early doors Wild West feel about it. Point number two, which could just as easily has been point number one, is in many of these cryptos, it's become aware that certain services such as the FBI or big holders of Bitcoin, carrot, ginger, and orange, by the way. Every proper trader should be on the juice, that kind of juice. Anyway, so the feds, a lot of the early miners, for example, the person who founded Bitcoin, this mystique, this mythology, which is always invokes suspicion in me, because it could be a government control structure, which is this discussion of this part two. How much of this is government control structure? In other words, an innovation that is selling itself as decentralized, libertarian, and free money. More just a different catchment point for all of us trying to flee the failed national state fiat issued crap paper that is being churned out at ever greater volume in a debt failing system. We don't know. A lot of the founders of these currencies, for example, Ether was pre-mined by big corporates to a large degree. A large amount of the total issue has already been held by these insiders from the beginning. Who are they? And also, why did they get the benefit to be in? It kind of smells in the same way you have a IPO, you have these ICOs. What you're actually getting is potentially the fact that something is occurring and the insiders may already have got in, just in the same way as Bono of U2 was gills full to the eyeballs with Facebook on pre-alerts. All the people that play the game and market and are insiders, and Bill Clinton and all of these people were stuffed with these new media big plans that have clear scale and clear energy, and you ain't invited. You ain't invited, and you ain't at the beginning. You can go pay full price on the IPO and watch it smash 40% down before it eventually recovers. So you got to ask a little bit about that. So that's my point, kind of two, and maybe a third point there, in that the people who's getting in, which corporations and which government agencies are getting in before you on these, and how much of that total float has been issued to others. So that's something to bear in mind. You're never going to be first at the table, and often you don't pay the best price, the guys at the front do, which doesn't mean that there won't be upside. A third thing about the crypto size is the gaming and the lack of infrastructure to cope with the volume. So either this denial of service is either fake, and it's just a way to say, it's nasty, malicious people that have attacked us. It could happen to anyone. Or it is a case of they haven't scaled up with the volume that has suddenly ramped. And as a result, people that have been leveraged have been shaken out entirely. They couldn't get in. You kept getting logged out. I had the same with Poloniex on the day that this all occurred. And I had it with Kraken on the day that both these exchanges occurred. In other words, you get simultaneous across all exchanges takedowns. Now, some people say that's a coincidence, it's conspiracy. Well, it could just mean that there's high volume and everybody is using all the major exchanges. So the same volume reason is just being echoed many times. It doesn't mean it's a conspiracy because it's all coordinated and simultaneous. It can just be that there's an overload of volume. But the point doesn't change that people that needed to execute couldn't, and that you got wild spikes and crazy trades. Another reason why you should watch my clip on why you should barely never use leverage, and that there's very rare occasions excuse me, where that's justified. And can pay you. In other words, you can be shaken out and your account emptied and closed out, all on auto. And this will happen, I suspect, a number of times, especially to people that have no experience with trading and don't understand the power of leverage. So that's another concern, is the infrastructure and the takedowns. And it kind of is a fourth point, rolling into fourth point, in that the leverage is going to set people up to fail. And people need protecting from themselves often, and those that don't will be carried out and will have losses of great scale and won't want to come back to cryptos and call it all a scam, and will externalize the blame for their own failings, and for not recognizing that this is the case. What's the fifth thing about this? Well, it's the security element. The notion is you've got to find out about how to do cold storage, and you've got to actually take out of the system that at the moment there's not the fact that you need to do that. It's kind of like keeping cash at home, having 100 grand and only leaving 5 grand in the bank, and keeping 95 at home because you don't trust the bank. Maybe we should be doing that, but you shouldn't have to do this in an online money system. When the amounts start to get significant and meaningful to you, in terms of where I am and what I've put in, I'm at that point. You need to understand cold storage, and why is that? Why is it not secure? Why is this a factor? Will this dissipate? Is it just part of the Wild West early doors part, or is this something later? So the security issue is another one. These are just digits in the ether. They could be taken off you and never seen again, and you can't say but I paid 50 grand in there, here's my proof. They'll go, well, you lost it. It's kind of like you withdrew 50 grand cash and you left your wallet in the toilet. Good luck, someone else has got it now. 995. Or it's been lost entirely to the circulation of the currency. So that's point number 5. What else can we do? Well, point number 6 is there's going to be a lot of waste of time as Me Too types that are all seeing how much market caps are raising, going up and ramping, and are going to say, well, we'll just do something similar and just make a minor change and be a crypto as well, so that we can also go up and be worth billions. It's like bridal.com in the .com boom and boo.com. They're on all Amazons, they're on all eBays, they're on all Cisco's, they're on all Googles. Some of them are just, happy-go-lucky clowns jumping on the wagon, and there will be cryptos that will have no real long-run sustainability or meaning, offer no real additional benefit or new idea or new concept to anything, will be very looky-likey, only badly run, and people will lose their money. So this is that's point number 6. There's going to be cryptos that fail, and there will be a high failure rate. Hence why I believe you should stay near the higher market caps where institutional investment has already gone in, and not be playing number 97 on the top 100 of cryptocurrencies to smaller market caps. So there's already enough volatility. They're already going to fly and be really, you don't need to be a penny stock amongst the penny stock categories. In other words, this has a penny stock nature to it. They can go up 100% even if you're in the top 4 or 5. So I would certainly stay well within the top 20 and preferably mostly in the top 10. And your biggest holdings be the likes of, I quite like Ripple. I still think Ethereum is good. And in and around that, and occasionally park in Bitcoin itself as well, because it seems to have a counter-cyclical. When there's a pullback, it seems Bitcoin gets the bid, and it's kind of like a flight to safety of the majors. So what's the 7th and final reason why you should be wary? Well, if you're getting in for the anonymity, I don't believe it's going to be anonymous. I think all our devices are hacked. This phone that I'm talking to you is probably hacked. It's probably recording and files on it. I put it on YouTube. It can be tracked, not specifically because of me or I'm anything special, but for all of us, our Samsung TVs. You've heard it all before. The anonymity and the libertarian aspects I'll question. And I'll also say it's not as anonymous as you think, although the blockchain might be airtight. It's how they get in before and after the blockchain. You put up your passport, you put up your ID, you put up everything, and a ledger is kept of everything that has ever happened, so this gets carried around. So I don't think you're going to get the anonymity that you expect in the way that you expect it, although it will have certain aspects. In other aspects, it might be even more visible, and so that's one point that I'd probably make about it all. And there was another thought that's just escaped me. I'm just going to think with point number 7. Point number 7, anonymity. Theft. Volatility is a good thing for upside in an expanding market, but most people aren't emotionally prepared to manage and make money in something that is a high volatility underlying asset. So I think there will be lessons handed out. It will bite on the down legs for people that can't bear to put money in. You can't put in more than you can be prepared to lose. So it's going to expose money management frailties in people. Which is great if you're a trader and you can even gain from that. It's not great for first-time experiences with fast-moving, highly volatile markets. There'll be slippage as well on the exchanges on volume when people all charge to sell at the same time. I would certainly use the troll box as a inverted indicator. When everybody is panicking and wanting to sell there, it's time to put really low limit buys in the market and hope to pick up on spikes. When everyone's rushing to buy, don't necessarily be the guy rushing to buy and chase. Make sure you have your positions taken already. Maintain some cash so that you always have some powder dry for opportunities, so that you don't have to sell out of something else and get back into something else. So that's not so much a bad sign of cryptos, but it's just a strategic point I'll make. So on point number 7, be careful about the volatility. The volatility is a gift, and it's also a poison chalice. So there's a couple of thoughts for you about concerns with cryptos and their proliferation. Bear in mind, a lot of the mining goes on in China, and mining is now becoming something that requires greater scale and investment. So I'm not so sure how long that model will last for the everyday hobbyist man as well. So the corporations or people that are corporately invested in this or have investors on a bigger scale will be the ones that will probably end up getting the bulk of the benefits on mining going in the future. So there's a bonus one for you as well. That's it from Francis. I'll speak to you soon. We'll keep updating you. That hopefully takes some of the go mad, just charge mentality. Be judicious, have a plan, write your plan down and execute your plan, and stick to the plan when it gets a bit giddy, both to the upside and a bit scary to the downside, and make sure you always have powder dry and resources and stay well away from that leverage most of the time.